I've been ideating on digitizing the mortgage for a very long time. I saw that mortgages is completely paper heavy, a lot of faces that you have to deal with. When we started this, from the moment that we had quit our full-time jobs, for the first 3 months, it was
Hey, Nishant, welcome to the show. How are you today?
absolutely good. Thank you so very much, JB and Sam. Privilege to be here, part of your podcast. Thank you so very much for having me here today.
That's fine, man. It's our pleasure as well to have someone who has worked in corporate for a while and decided to start a startup in India. It's a market where it's a lot of competition, a lot of hustling to be done. And so this podcast, we are very excited to understand your journey and to see how did you crack the market and be a successful entrepreneur in the finance industry. All right. So without any further delay, I want to start with the first question. You launched Zoop.money. Yeah? I believe it's a platform,
Yeah.
fintech
Yes.
platform in
Yes.
2024.
Yep.
Did you bootstrap it with your own savings or raise capital to get started? So let's talk about that.
Um, when we started this at an ideation stage and when we were having the side hustle, from the moment that we had quit our full-time jobs, for the first 3 months, it was a self-funded idea. Uh, and that's where we had met. That's where I had met my other co-founders too. Uh, from the ideation to starting on execution of the idea, it was bootstrapped, self-funded, and that's and of course when we went into the execution, right from getting out of our ideation to executing onto the product that we wanted to actually have, is where we had gone for our first funding, which was a seed round that we had in the month of March 2025, was when we had raised our first fund.
What are the challenges in raising that first fund? How did you convince the investor?
Um, Typically, if you look at the fintech story and the funding here in India, post 2022 till about 2023 and early 24, the market was really, really good. And if you ask me now, it's a funding winter here in India, especially on the fintech. Yeah, uh, there were a lot of challenges. Fortunately, before we started even ideating, we had floated this idea with a couple of our family and friends uh, who were very much interested in building this up together, coming in as angels. So our seed round primarily is a mix of angels that we have and one institutional boutique venture capitalist firm who've invested in our idea, and that's how we raised our funds. Challenges, yes, of course, was there in terms of raising the funds, but fortunately, uh, given the team that we have and the idea that we were working on and the disruption that we tend to bring, was something that differentiated us from the competition that is there in India. So that's where, fortunately, we raised our first seed round.
You know, um, what's interesting to me is you just mentioned you quit your 9 to 5 job and you
Yeah.
jumped full fledged into this venture, right? Which is kind of unknown territory. I believe you had the finance background in the banking sector, I believe, and that's what must have given you idea and confidence to start this business. But to quit a 9 to 5 job, and you must have used your savings to initially work on the idea and start forming a team. Were you not scared that what if the idea fails? What was your backup plan? How did you prepare for this?
So I'll run you past my journey. I've been a hardcore mortgage banker for 2.5 decades. Spent a lot of time, about a decade, with a large bank like an HDFC. Started my career with G Countrywide erstwhile, which became G Money here in India. My last assignment was I was heading the country for one of the fifth largest banks in the country, which is Yes Bank. Had built their entire mortgage portfolio right from scratch to taking it up to about 17 or 1,000 crores of portfolio that I was managing as a P&L owner for the bank. Uh,
Mm,
Let me tell you, I've been ideating on digitizing the mortgage in this country for a very long time. You rightly mentioned, what kept holding me back, and whenever that, I thought of taking that leap of faith, it used to be always on the end of the month, probably on the 30th or 31st of the month, where I used to always get a SMS telling that your salary's got credited, and that kept me holding, telling that, hey, look, what am I going to do? But then this was something which was the need of the hour, at least in this country, where I saw that mortgages typically is completely paper heavy. A lot of faces that you have to deal with uh, actually required digitization. So that was something that kept me going in terms of going and executing this as an idea to getting into a shape. And 24 was a time when I had thought that this was the right time, that I need to take this leap of faith and jump into this. And of course, on the backup plan, uh, I come from a very, very modest background. Fortunately, as I said, I had the opportunity of working with some really sovereign brands here in the country. The only survival piece that I had as a part of my saving was the ESOPs that I could accumulate over a period of time. And before I have taken this leap of faith, which I started ideating way back in 2021, 22, I ensured that my bank balance for the next 24 months is funded with the expenditure that I have. And let me tell you, uh, the confidence that I have and my co-founders have is something that uh, we will ensure, and we are ensuring that this idea is not going to fail. So it's going to float, and we're going to make it a unicorn for sure.
Oh wow, incredible journey. Thanks for sharing that.
Absolutely.
Sam, yes, you go for it.
I was curious about, how you said that there was three guys, including you, or is it three
We are,
plus you?
yeah. So we are four of us together.
Four
A,
of us.
a very healthy mix of a team of bankers, a product tech expert, and of course, a guy who comes in with a lot of experience on the real estate side. So two of us are ex-bankers. The other two come in with a huge experience on the product and technology, and of course, on the real estate side. So it's the right marriage between the four of us, is what I can say.
Was it chosen or did it happen like that?
uh, it's I call it destiny. So two of us, me and my other co-founder Shailendra, we've known each other for last 15 years now. We've been working husbands for last in a couple of companies that we've worked together, be it Axis Bank, yeah, and Yes Bank for some time. But the other two were, I mean, our paths crossed when I was a part of Yes Bank. That's where I had met my third co-founder called Aruna Parihar. Again, he's an IIT KGP graduate, was looking to build in something on the secured side, where he had been one of the founding team members for one of the Flipkart subsidiaries called Money, which is one of the payment gateways, I like what a Paytm is here in India. And fortunately, we met through a common friend of ours. Uh, Ideas matched, and we decided to get married. So we got engaged then and there in the first meeting, and then we decided to get married, and that's where our journey started together. And the fourth co-founder is a gentleman called Digvijay Singh Chauhan. He's a Purdue grad on the aeronautical engineering, had spent close to about 10 years with Airbus as a data scientist, uh, all the way from aeronautical engineering to the airlines. He moved in to real estate, working for one of the second largest CRM company here in India called Insomniacs. And he's also been on the advisory board to a couple of large developers in Bangalore and, of course, Bombay. So he and Aruna Parihar have been working husbands for about, again, 13, 14 years. So we all got together. We were ideating on building something common, and then realized that there's a lot of value that each individual bring in here. So that's how we decided to get along, and the journey so far has been exciting. Uh, and yes, as I said, we're confident enough to ensure that the product is accepted in the market, and we become a unicorn soon.
Which is very, very exciting. And congratulations to you guys, because it sounds like a brilliant idea, which is going to add a lot of value to the consumers out there. I was also curious to understand your idea when you guys sort of sat together and discussed it. What did that make sense straight away?
Oh yes, to a large extent it did. Having said that, it was not that we're building something very, very new into the market. The only thing that we have done is we are building it slightly more different, with a complete focus on the segment that we intend to work in, and we are creating in turn we're creating a new segment when it comes to the housing loans. So, I mean, there are multiple players in the country when it comes to fintech on the sourcing piece, likes of Paisa Bazaar,
Mm.
Ambak, basic home loans, and there are multiple, large distributors like an Andromeda, Urban Money. These are all physical distributors. So we wanted to disrupt this particular distribution model with technology and a huge differentiation on the business rule engine, orchestrator that we have created with multiple lenders that we have. So I'm sure I am using a lot of jargons that's going to be Greek and Latin to you, but there's a huge differentiation that we bring in with the kind of experience that we've had into the banking and real estate that we get onto the table. Unlike any other founder who's been about 25, 28 years or a college dropout with zero experience, building something new. So that's a difference that we bring in, especially in a fintech, which is into the banking and lending, very tightly regulated in this country. So you need a lot of experience on that, both the real estate and of course on the banking and lending.
How did you test your idea? Because I know a lot of people, they will have ideas, and especially fintech or just talking about tech startups. The hardest thing I feel, people dive into things without testing them. How did
I
you
agree.
guys know that this concept was going to take off?
So when we were ideating, as far as me and Shailendra was concerned, we knew the pain points any lender or a large bank had in this country, which was typically how to reduce the cost, improve the efficiency, and how does that institution become much more profitable. So we had some idea on that when we started ideating and building on our product. But when it came to real estate, we wanted to understand the real pain as to what a real estate developer goes through. Typically, a real estate developer's core business is to acquire a land, construct a project, and sell the dwelling units.
Correct.
When we went and did our research with the real estate developers, we understood that the poor guy is not only into the construction, but he's also looking at getting the customers' home loans also done, which took about 30 to 40% of their productive time in terms of not building and selling, but also ensuring that the home loan is being done by the right lender. So that was a huge pain
For the
point that
customer
we could sense
who's buying.
for
Correct.
the
Yep.
customer, for the
Who's buying,
buyer,
right,
for the buyer
right.
into their project.
Interesting.
So we
Okay.
understood that pain point. We did our research well. We understood the pain point of a home buyer also, as to when a home buyer goes and likes a project, wants to buy the property, is looking for a home loan, the poor person has to run from pillar to post. Let me tell you, a turnaround time from the point of booking a property to getting a home loan is as high as about 30 to 60 days, which
Mm.
means the guy who is intending to buy the property has to defer his decision by about 2 months till the time they don't get a confirmation from a lender that, hey, look, you are eligible for a home loan and we are ready to lend you a home loan. That's where the buyer actually closes the transaction. Now, understand the entire cycle. The buyer takes 60 days to actually confirm the builder that, hey, look, I've given you my token amount and I intend to buy this property, but I will buy it only when I get a sanction from my bank for a home loan, which is a 60-day turnaround time. For a developer, he gets a token amount, blocks the property, and has to wait for 60 days to encash that property to be sold after he has done the construction. God forbid, if the developer has raised a debt on that particular project, understand the interest cost for that developer. Similarly, for a bank, you know, uh, the major issue with the bank is they don't get the customer actually appraised or a semi-baked transaction to be underwritten. Now, if a Nishant Mehra is going and buying a property, has applied for a loan with someone like an HDFC bank, not realizing that I'm not eligible in HDFC bank for whatever XYZ credit reasons,
Yep.
I approach HDFC, they take about 40 days of time and then they
Just to get
reject my
further
application. So understand I'll have to go back for the entire process with
into
some
loop
other
and
lending
yeah.
institution. Plus for a bank, underwriting and rejecting that transaction is also a cost. Every due diligence done on that customer before the rejection of the application is a cost to any bank. So this cycle in itself was so large that we wanted to actually, look at every pain point. We did our research on every pain point, and that's exactly what we are addressing for all the stakeholders in this entire journey of Zoop Money that we have actually done. yes, the research was very, very intense before we jumped into executing this idea, right from an ideation to actually having the product up and running. Is the research that we did for about 5 good months before we got the product actually developed and deployed now.
Look, AI is taking over the world. Everyone knows that, and it's inevitable. We can't avoid that. For someone who's listening, he may be thinking, okay, why should I go to Zoop Money? I can use any of the AI tools and key in my requirements, and it will do the research with which banks offer me the best price, and I'll go with the bank and do the and build relationship and get the loan approved. Why should I go to firms or fintech platforms like Zoop? What you guys are adding value other than what AI is not giving adding to me?
Interesting. AI, to be very honest, I find it to be a huge bubble.
Mm,
Of course, banking and underwriting is something that cannot be done by machines, except for enabling a faster decision to be taken.
right.
So this industry, since it's so regulated, it would obviously need a human intervention when it comes to taking a decision. One, having said that, uh, see, the difference that Zoop Money does is, I think I didn't tell you the entire framework that we have. So we are the only and the first digital loan service provider in the country who've integrated with 37 lenders in this country. So we are an empaneled lender when it comes to the bank and lending institutions. And we
Mm,
have done our first deep tech integration with the second largest bank in the country, which is ICICI Bank. Uh, Now, when a customer, and our focus is typically on the primary home sales segment, which means we are tying up with the real estate developers and offering a home loan right at the point of sale. So if somebody is getting into the Zoop journey, the lead is passed on by the sales executive of the real estate developer who's selling the property to the home buyer. Okay, so the
mm,
link goes from a verified source, and the guy does his journey then and there and gets a complete sanction in 20 minutes vis-a-vis a 60 days that they were taking. Now, with the AI, he might get a tentative eligibility, look at the banks with the right offers, and then start approaching individual banks. So
right.
it's like, as good as the physical distribution, which is already available. That's what someone like an Andromeda or Rulons have been doing. The difference that Zoop Money does is that you have a real-time offer given to you at the point of sale when you're buying the property
Mm,
with the bank that suits best for you. So before the offers are made to you, we have a orchestrated business rule gating criteria where the ML does on the back end and gives you the right offer basis your profile and your salary. It's like, when you book an airline ticket today, you go to a marketplace, right? Something like a Sky Scanner. So Zoop
mm.
Money is a Sky Scanner on home loans right at the point of sale.
And that you will be so Zoop Money will be approving the loans right there and then for eligible customers.
No, we are purely digital distributors. The bank is going to underwrite the profile of the customer, but real time. Instead of every paper going to them on a physical format,
Correct.
it
Yeah.
goes to them digitally, and we've done the gating criteria and the checks on the Zoop Money platform, which
With them.
enables the bank to take the decision then and there very faster, rather than spending 60 days or 45 days waiting for the papers to come in physical.
So when you say, is it round the clock service? So even in 2 o'clock in the morning, I can submit my application and it'll
Oh
get
yes, of course.
really
That's the charm of digital.
right. So okay,
So it's 24/7.
24/7. That's interesting.
Yes.
I'm
If
I'm, I'm
somebody
very
wants to
curious.
check their home loan eligibility at 3 o'clock in the morning, they might as well do it with the Zoop on the Zoop
Right.
Money platform.
I'm very curious to understand what is your revenue model. How do you? I believe my understanding is, correct me if I'm wrong. My understanding is you get the loan and the bank may give you a bit of a cut on based on the
Spot
custom
on. Spot on.
based on the
Absolutely.
on the loans they have been offered to the clients. And I believe that's my
Yes.
understanding. But please feel correct me. I'm
Spot on.
curious to understand the revenue model.
You're 100% right. So our revenue model on a home loan application is paid by the bank on
Hmm,
the value of the loan that gets disbursed by the bank. If
right.
supposing there is a 1 crore transaction that has got disbursed by an XYZ bank, there is a ladder up slabs that every bank has on the monthly volumes that any distributor does. This is which they give you the payout. So our revenue model is purely from the banks, as you rightly said.
Would you be able to tell the percentage that cut that you'll be getting from the bank, or is this
So the
something?
slabs,
It's not a
it
fixed amount,
differs.
or
I
is it
mean,
a variable cut, depending
look,
on
it's a
each bank?
variable cut depending on what volumes are you disbursing with the particular bank. Starts from
Right.
as low as about 0.5%, goes up to as high as about 1.25 to about 1.5%. So someone like an XYZ bank says that, hey, look, you guys disburse about 10 crores in a month. We pay
Mm,
you 1.1 or 1.2%. So that's how it is. Uh,
that's okay.
but yes, we obviously as a fintech fall on the topmost slab, because every project that we have deployed ourselves into, like for example, now we have deployed ourselves into 24 real estate projects within Bombay and Hyderabad with an average ticket size of 1 crore. So which means we have a home loan opportunity of 1400 crores till the 31st of March 2026. So we will always hit the topmost slabs there
Mm,
for any institution.
And with your guys' idea now, it's been more than a year now that you guys have been operating and going for your first round of float. How are your margins looking? Are they enough to where you thought they would be to cover your costs?
Interesting question again. Uh, See, when I said you that there's a huge differentiation that we bring in vis-a-vis the existing distribution model which is available in the country. Currently, most of the distributors in the country, which are physical, phygital, and who claim themselves to be digital, work on a wafer thin margin of 0.01 to 0.02%, which means if they are making 1 rupee as a gross revenue, the net margin
Mm,
is as low as 1 paisa or 2 paisa.
mm,
So since we come in again, I've been telling this again and again. We come from a banking background where we have, where we have handled large P&L. We understand as to what margin actually, makes a difference on. That's where the real game changer is for Zoop Money. We work on a margin of at least 45 to about 55%. So if we are making 1 rupee as a gross revenue, the net
mm.
margin that Zoop Money has is close to about 45%. So we make 45 paisa out of every transaction that we do. We didn't want to get into that rat race of aggregation that happens in the country to a large extent. We wanted to differentiate ourselves largely uh, of not getting into that rat race of aggregation and
Mm.
do a huge aggregation and a sub DSA model is where we have differentiated ourselves. So we work very closely with the real estate developers and ensure that we keep our margins intact, which takes care of our burn largely on the tech.
someone who's listening right now could be anywhere in the world, and I'm curious to understand. Okay, you spoke about real estate, you spoke about finance, you spoke about banking, and they may be thinking in their head, okay, why don't I invest in India, buy some real estate and do some investment there? What are your thoughts about it, and what are your advice to someone like foreign investors who are wanting to invest, and why should they invest, and how is the investment market?
Uh, See, fortunately, if you see India as, I mean, I'm typically talking about the housing market.
Mm,
The Indian housing market is valued at close to about $300 billion today. Uh, with a CAGR growth of about 18%, 2030, it's going to cross to about 1 trillion to about $1.26 trillion.
Yeah.
Fortunately, in India, the real estate has grown at a CAGR of about 13 to 16%.
mm,
When I talk about quarter on quarter growth, I mean the third quarter vis-a-vis the second quarter, the real estate prices have seen a growth of about 12% on an average.
Yeah.
And let me tell you, real estate growth is always compounded. Okay, there's
yep,
always a
Understand.
yep,
compounding growth.
Yep.
Fortunately, in a developing economy like India, most of the housing demand is on under construction, which is primary market. Now, when I talk about under construction, unlike a developed economy like in Australia, where you know that everything is ready built, ready to move in, you have everything digitized when it comes to land records in terms of the title search. Just go buy the property and get in. Vis-a-vis in India, when you see a lot of under construction projects, the demand is as good as 53% of the housing market is on the under construction properties. Fortunately, in last 1 decade, uh, 60% of the country's land records have also got digitized, which means, you have a complete view on the title for last 30 years for any property. And under construction property always there is a gestation or a waiting period of about 18 to 24 months before, you get the possession of your house. So it is always on a compounding effect when you book a under construction property at its stage zero, where the builder has actually launched a project. Vis-a-vis you getting your possession after 2.5 years, from the point of booking to the point of getting the delivery of your property in 2 years of time, the property price of your dwelling unit would have gone up by about 12 to
Probably
20,
increased. Yep.
22%. You know,
Mm.
it's always good to invest in properties. That's what I mean. If you see, our great grandfather, father always used to teach you three things: invest in property, gold, silver. Not on stock market, volatile, not on anything that is intangible. The reason is any tangible investment, whether it is a real estate or any commodity like a gold and silver. Look at the prices of gold and silver today across
Right
the
now,
world.
yes.
Same goes for property. So when you invest and you see that there is a tangible asset that you can touch and feel, the appreciation is always going to be higher. Property prices, I haven't seen in last 2.5 decades of my experience into banking and mortgages, the property prices have actually fallen to the level of your cost price or below your cost price. Would have got stagnated for some time, but if you've invested 1 rupee in a property, it would have given you a return of 1.5 or probably 2. That 2 would have come to 1.5 or 1.25, wouldn't have gone to about 80 paisa. At
Okay.
least that's how the trend is. And India as a market on the real estate is really, really lucrative today, both on the residential and commercial. You would have seen and you would have read a, a lot of GCCs have been setting up their huge shops now in India, be it from the US, Europe, and other side of the world. So the opportunity of both on the commercial and residential, real estate is immensely huge, at least in this country from an investment perspective. And the good part is, around 3 weeks back, Reserve Bank of India has also made an announcement that they are now re-looking at how the FDI, there can be 100% FDI on the Indian real estate, which was never ever open, only on the real estate side. The moment they open the FDIs to 100% on the real estate side through a ECB route, let me tell you, the cost of funds for any developer, the cost of borrowing for any developer, real estate developer, is going to go down by at least 5 to 8%. The moment the FDI is opened on the real estate side. So huge opportunity. And I also see the millennials and the Gen Z, uh, they don't want to buy a complete property. They want to invest in a fractional part of a property also. So you would see in times to come, there will be a lot of fintechs who are going to focus on fractional investment when it comes to real estate also. I like the way it happens on the crypto and the other currencies that you have. And these fractional investment properties would get tokenized and get listed in global markets, where people can buy as low as 1 square feet on the coin that gets listed in the global market for the Indian real estate. So opportunity is huge. I see, and the way the country is growing, the way it is transforming on the digitization piece, real estate is one place where I see a growth of nothing less than about 20 to 25% year on year. And this is again a compounded growth, a CAGR growth.
So are you telling that if someone is listening, he or she may be thinking, "Oh, there's too many jargon used in this podcast." All I want to know is if I invest property or real estate in it, will I get a decent return? And you're saying easily you'll get a decent return, no matter
Oh, yes.
no matter whichever part in India you're saying, anywhere you invest, or is there any specific pockets they should be looking at, any specific state?
Typically in the tier 2 market, something like Indore in Madhya Pradesh, Jaipur in Rajasthan. The reason why I'm telling tier 2 and tier 3 markets is where there are a lot of commercial activities happening in terms of development and in terms of GCCs coming and setting up their large shops there. So there'll be a lot of opportunity of employment getting, happening in those markets. And of course, when the employment goes up, the demand for housing also goes up.
Yep.
People would
Yep.
intend to buy more properties, and there would be a lot of real estate activity happening in there. So I would suggest in tier 2 and tier 3 markets, because one, it gets you an affordability when you're investing, and your growth is, in terms of return, is also going to be really, really high. I would suggest people to invest in tier 2 and tier 3 markets in India.
Tier 3 markets.
Tier 1 markets, typically like a Bombay, possibly Bangalore, not Chennai. I mean, typically Bombay, Bangalore are all stagnated markets. You don't have, at least in Bombay, you don't have land. Whatever sells is the air. The higher the floor, the higher the price. So you are actually buying the air there. So no land, reclaimed land, you pay for the air.
And the other thing is also, to your point, Nishant, that if you want entry into the market, and this is very similar to Australia, that you could get in at a lower cost.
Yes.
Which also then means once that CAGR happens and once you get to your returns, you can make that higher return in that 2-year time. If you take your example, that you get in at under construction and then 2 years later, by the time you get possession of your property, it's gone up in value.
Makes sense.
But your entrance
Absolutely.
is at a lower point, lower cost.
Exactly.
And for our audience as well, I just want to make sure. So CAGR is, correct me if I'm wrong, compounded annual growth rate. Is that correct?
Yes.
Yes. So, because a lot of people, if they are thinking of the jargon, and FDI is foreign direct investment.
Foreign direct investment.
Right.
Absolutely.
Okay. Awesome.
Absolutely. Spot on.
That's great. This is what it's good to have a CA sitting as your wife, so we'll be able to decode the jargons, which is great. So are you telling me if any foreign investor wanting to invest in India, will Zoop Money platform will be able to help them, or is it just for domestic audience at this stage?
So let me also clarify to you. Zoop Money typically as a platform enables home buyer getting the right home loan from the right lender. What we intend to take this forward a notch ahead over a period of time is how we can also look at fractionalizing the real estate investment globally, which is still at an ideation stage that we have, but we haven't thought of it. But we have a lot of partners who've been into fractional investment program on the fintech side. But yeah, having said that, since we work very closely with the real estate developers, of course, Zoop Money can, enable that investment for any NRI who intends to invest on a residential property and equally on the commercial property because of the proximity that we have with the real estate developer.
Look, you mentioned that this space already has some well-known big players such as. How do you, what's Zoop Money doing differently that makes you stand out and win customers from these established competitors? And how do you keep an eye that, say, for instance, you throw an offer, you throw a product that is very attractive, and sometimes your competitors may see that and try to match it or throw something better. You know what I mean? To attract the clients towards them. How do you manage that competition? And especially the reason why I'm asking is India is a market. It's a huge market, right? It's a lot of opportunities and a lot of competition. And in fraction of seconds, not even fraction, in milliseconds, I'm saying things will change. And people are waiting for opportunities. So it's a tough market. So how do you stay vigilant to make sure that Zoop Money doesn't crack?
Sure. So the first thing, as you rightly mentioned in your question, is that India as a country has got a huge opportunity because of the reason that we are so densely populated. Wow. With the population size, you measure the opportunity for any business. Having said that, you've rightly mentioned the competition is stiff. Someone like and the other players, though they are competition to us, but they're not a close competition to us. The reason being, or probably any other large distributor like, there's a very, very huge differentiation between Zoop Money is basically a lead aggregator. If you go through journey, what they do is they ask you for a few questions like a Google form. What is the loan that you're looking at? You say that I'm looking for a home loan. Okay. What's your annual salary? You plug in your own salary which might be a 5 to 10% variation than the exact amount that you would understand or remember what comes on your payslip. So any fintech today in India actually relies on a customer's self-declared information. Okay. And then they show them an offer. Now, when this goes to an underwriter or a bank or an institution, which generally takes the documents from the customer than the information that has been self-declared, there would obviously be a variation of 5 to 10%. Now, a lot of people in the country don't even understand as to what a gross salary is and what a net salary is also. Probably I might be earning an incentive which I might not know my exact amount of my incentive monthly. I might put in a random amount there, except for the annual bonus, which generally people do understand. So when you get a half-baked information basis which you've made an offer, when the bank underwrites the entire transaction basis the documented income, there is always a variance of about 30 to 40%. So if you've got a loan offered on a platform like a Paisa Bazaar to an extent of an X amount, the final sanction is at least 20 to 25% lower than what the offer was shown. One. Two, would take this information, pass your lead to multiple lenders. Say if they are empaneled with 70 lenders in the country, they will pass on a JB's complete information to 70 different institutions. Now those 70 institutions, one after another, start haunting you over a call. Hey JB, we're calling from so-and-so bank. We got your lead from, we came to know that you're looking for a home loan. Not even bothering that JB is in the middle of a meeting. It's midnight in Melbourne. They would call you at any time as per their, convenience. So what we understood and what we've built is, as I said, we have created a business rule orchestrator. On Zoop Money, we are ensuring that the right borrower is going to the right lender. So we are getting the right lender closer to the right borrower, one, not on a self-declared information, but on the document that gets uploaded on Zoop Money, is verified on the public domain, and that gets pushed directly to the lender then and there after the offer is shown. So we are taking and we are showing an offer completely on a documented income, which means an offer shown on Zoop Money will not have any variance or might have a variance of not more than 0.5 to what 1% when it comes from the lender after getting underwritten by the lender. So that's the difference that we have created. And we have also created a gating criteria for 37 lenders that we are empaneled with, which means a gating criteria is all the wherein the customer fits well. There would be 10 categories that the customer would fit in well. So probably, for example, if a Nishant Mehra has applied for a home loan through Zoop Money, he doesn't fit in well on all the 10 criteria of someone like a SBI, State Bank of India. Zoop Money will never ever show the State Bank of India offer only to Nishant. If he fits in with someone like a Abbas or an Aadhar NBFC, he would only be shown those offers where he has already crossed those 10 tick marks for that particular lender, rather than showing him 50, passing on that lead to 50, and knowing that this is going to get rejected in 49, will get approved by one. And the guy gets haunted by 50 people. So that's what we have done through our ML and the digitization that we've done.
Sounds very efficient.
Yeah.
It's way more efficient for the consumer out there.
Exactly. So that's what the intent was, to get the right lender closer to the right borrower, rather than, lender haunting the borrower, not even knowing that they're not eligible for the loan with them.
Exactly.
So
no point.
Doesn't make sense.
Time
it's
gets
sheer
wasted.
wastage of time, money.
If that's okay, I wanted to take Nishant back. Nishant, I asked you before, when we were talking about testing of the idea. I'm going to take you back to that question for 1 second. We will be having our listeners who would be wanting to get an idea off the ground. Could you give us some, say, tips on what they could take away today from this podcast episode? Maybe top three tips come to your head.
So, anything onto the startups, first thing first is be very clear on what problem is somebody going to solve. And you, it's not that you've heard it from somebody unless you've not experienced the problem your own self. Till then, you don't know the pain of that problem, that you're going to solve. One, understand, experience the problem that you're going to solve. Do your research well in terms of, spending a lot of time as to how are you going to solve that problem? What is the ammunition that you need to solve that problem in the quickest time? It's all about convenience. digitization in the country today or across the world is all about convenience. Typically in India, we used to go and buy a grocery from a grocery store about 5-7 years back. Today, everything is available at a click of a button in about
Mm.
5 minutes. So you look at the Blinkit story, you look at the e-com, and you look at the Q-com now. E-com has now become obsolete. Q-com is the new buzz now. So people wouldn't prefer to go and order in an Amazon or a Flipkart, rather would prefer to order in Zepto or a Blinkit because it's all about convenience. How much time
Mm.
are you saving? What is the convenience that you're getting? So it's all about convenience. It's all about time. So do your research well, understand that problem, how much that problem could be converted into convenience with technology is something that people should look and work on. And of course, the cost involved to execute that idea is very, very important.
Explain to us QCOM as well, because I'm hearing that term first time.
Oh, so QCom is nothing but a quick commerce. So if you have
Right.
to order just a loaf of bread, will get delivered in 3 minutes in India today with a Q-commerce platform called Zepto, or a Q-commerce, a quick commerce platform called Blinkit. So it's that kind
Right.
of a convenience. Even if you want something as cheap as a needle or a thread, gets delivered within minutes at your doorstep. That's the
Right.
convenience that has got created in this country with the Q-commerce. And Q-com is nothing but quick commerce. It's all about time.
Right. You mentioned about cost. You said plan, research, try to solve the problem using technology, right? And you meant
Absolutely.
last one is make sure you have sufficient cost or capital
Absolutely.
reserved for the idea. How much? Like, how do we know? I mean, I have an idea. I want to do this X, Y. I want to do this. I want to similar. Okay, someone is listening right now. They have an idea. They want to build an app. They want to digitize that. But how much? How much do I have to save? How much capital is safe? How do they calculate that?
So the cost is purely on the uh, profit and loss statement that you make when you have an idea to be executed. When I talk about cost, what will be the cost of technology? When I
Mm,
talk about the cost of technologies, how many people would you want to deploy to create a product, right from a zero to having the production done and the product to be delivered? It's not only about people, but the technology costs like AWS, multiple other tech
mm,
costs involved. So that's exactly what I meant by cost. What's
right.
the cost
Okay,
for creating the technology? There are bits and pieces that you have to sew and create a product. So that's the cost that I intend to
makes sense. Cool.
tell.
I think that is coming to an end of this interview. I think we have asked the questions what we wanted to clarify and check with you. But thanks for your patience, Nishant. It's been a wonderful
Pleasure.
experience.
I didn't realize we've already
I know.
exceeded our
45
time, but
minutes.
it was really a pleasure having this discussion with you
Uh,
guys, and really making you guys understand. I'm sure a lot of jargons in between, but yeah, uh, it was a pleasure.
Great. And someone who's listening right now, please check zoop.com or Zoop. What's the website? To find
Zoop.money.
zoop.money and to get more info. And you can reach out to Nishant on LinkedIn. And I'll put the LinkedIn link on the description as well when the podcast goes live. So please stay in
Inshallah.
touch if you want to invest and get some ideas from Nishant. I'm pretty sure he'll be happy to help.
Oh, I'd love to. Thank you so very much.
All right.
It was a
Thank
pleasure.
you.
Thank you so much, guys.